How about now? Can you hear me now? I know you can hear me now. Okay. So we have that. All right. We're back. Thank you guys for letting me know. Like I said, I'm just having I've never had so much technical difficulties in one stream. It's been getting a little bit worse the last couple of weeks. All right. So let me start by saying that we're talking about stock market being down another 20%. That's the news of the day. A very prestigious Wall Street strategist put out a note on Twitter that says, based on this, this, and this, if history means anything, we've got another 20% downside to go. And since the market is a little bit better, thank you, Bob. Bird, thank you very much. Bobby, thank you very much. So, since the market is already down about 17% um, from its high, going down another 20% would be tough. It would stink. We'd all be suffering. But we've been there before. The question is more like, do we get to another 20% um, downside fast, or is it a long, drawn out process with lots of bear market rallies that pulls you in? Because a bear market would make you suffer. And I've been through some really bad bear markets. I've suffered many times over the last 30 some odd years that I've been a financial advisor to regular folks just like you. So, this is something that we'll talk about. We're going to take a look at how the markets did. I'll throw in a little perspective and we'll get to it like that. So, let me get to camera one, and hopefully you guys could see everything that I'm looking at. But let's go to a tweet of the day, okay? Pop myself up in the corner here. So the tweet said this: since 19 oh, my computer is just blacking out. Okay. Since I don't know if you could see that. All right. Hopefully that'll be a little bit better. Since 1960, PEs have trended lower when inflation is higher, with year-over-year core PCE now at 4.6% and the S&P trading at 19 times earnings. We should see stocks fall another 20% by mid-October. It's historical. If historical seasonals mean anything, this is Scott Menard, Chief Investment Officer of Guggenheim Partners. And this tweet has been getting just, a lot of play. So based on where things are in the markets right now, Dow, the S&P, by the way, you cannot invest directly into an index, but you could invest in a security that tracks your mixed index. The S&P went out today at about 4,000, up about 0.6%. So another 20% would send us down to about 3,200. And that would be pretty much the full rally before the pandemic hit. That would, and we've been a little bit lower than this already. So that would basically erase the entire post, the whole rally since that started with the bottom of the pandemic. The VIX was down a little bit to 23. Not surprising. The market was up a little bit. Oil was up a drop. It's still $82 a barrel. Gold was down. Um, nothing to scream at. It was a good day because it followed yesterday, which was the best day since June. So the fact that we had some follow through buying into the end of the day today, that's generally speaking um, a good sign. Okay. So let's just to make sure you know what I'm looking at here. Okay. And let's take a look at bond yields. Bond yields were up modestly across the board, but the 10-year at 3.32. The 2-year is still over 3.5. In fact, the 2-year is higher than the 30-year. So you get a higher yield by buying a 2-year bond than a 30-year bond. And that's telling you, this is why people say, um, strategists say that uh, inflation isn't yet anchored in the minds of consumers and investors. Because if inflation was anchored and we expected a lot more inflation to stick around for a much longer time, you would see the 30-year yield and the 10-year yield much, much higher, but they're not. So people, it tells you that bond investors do not believe that the spout of inflation we have is going to that it tells us that bond investors don't think that this bout of inflation we have is going to stick around for the long term. Okay. Um, and here's a headline that I saw that I just want to show you a headline that was a waste of time. It says, stock market will continue to be volatile in the fall, says JP Morgan's Gabriela Santos. All right. You have to always expect the stock market to be volatile. Oh, it's going to be volatile through the fall, or, we're not out of the woods yet. We're never out of the woods. There's always volatility. And if you're waiting for no volatility and to be out of the woods, stocks will be much, much, much higher, only to get rocked again at the first sign of volatility. So don't make a decision based on current volatility, because volatility is high right now, or because potential headlines could be scary right now. Do not make investment decisions for the long term based on today's scary headlines. This too shall pass. As bad as you think it is, this too shall pass. I've seen some pretty bad things in my life, and I'm telling you, I speak from experience. Let's take a look at one more thing. Okay. The spread between the 10-year and the 2-year is 0.19. It was about 0.38, 0.4 recently. So the inverted yield curve is not as inverted as it was before. And the differential between the 2-year and the 10-year is actually getting much closer. And that could be a sign that maybe if we do have a recession, it won't be so bad. It'll be so much shallow. We'll have to wait and find out. I know you want me to tell you what's going to happen. I'd love to tell you what's going to happen, but it doesn't work that way. And it wouldn't be any fun for you if I told you what was going to happen, right? It's not fun for you. We're in it for the adventure. And I'm only kidding. I know you want to make steady, Eddie, easy returns, but long term the stock market does well, but in the short term it does this. But over time, the trend is higher, and that's why we always say, give it a long time. The 10-year, the 30-year yield on the mortgage, the 30-year mortgage, is still about 6%. So it's still pretty high, and it doesn't really look like it wants to come in. So that's my story. I'm sticking to it. I will pop out of that, and my screen is actually completely dark, so I can't even actually end the presentation because I can't even click on anything. Right? I'm going to try to grab the screen and drag it over to my other screen. So this is weird. So I'm kind of like stuck like this for who knows how long. All I did was move this device, and ever since then, the whole thing has been doing that. Okay. Well, anyway, I hope the show was a good one for you. Sorry you had to put up with my technical difficulties, and I will be back Monday. All right. If something happens crazy in the market tomorrow, then I will definitely do a live stream tomorrow. So hopefully you don't see me tomorrow. Okay. Have a good night.